This is Craig Haugard with your Financial Issues Ag Update. Well, the monthly USDA report threw a little more gas on the fire that we've had going lately in the corn and bean markets. The report reduced the harvested acres for corn by 1 million acres while trimming the projected yield by only 1/10 of a bushel per acre. That was a smaller yield reduction than what the trade had been looking for. The big cut to production was partially offset by 50 million bushel cuts to both feed and ethanol usage. Now, the feed number continues to have me puzzled. We have record cattle and hog numbers, but somehow they're eating less than they did last year. Something doesn't smell right, and it's not the livestock that stinks in this case. The USDA pegged the U.S. soybean yield at 51.9 bushels per acre. That was unchanged from last month. The real news came in the bean harvested acreage, which was cut by 1 million acres. In addition, exports were increased by 75 million bushels. All of that combined to drop the projected ending stocks number to 290 million bushels, well below the trade estimates of 369 and last month's estimate of 460 million bushels. Toss in an uncertain weather story in South America, and you have the potential conditions for a very interesting market in the coming days. Wheat was kind of a mixed bag. Chicago wheat was a little weaker as USDA increased the world stocks estimate in Friday's report. Kansas City was stronger as a result of the dry conditions persisting in southern Russia and the U.S. southern plains. Kansas City was also supported by the USDA reducing the hard red winter wheat carryout by 51 million bushels. Minneapolis closed a touch higher as we saw some domestic mill interest and a real lack of country selling. Cotton futures hit their highest level since February 24th and then hung on to close higher. The USDA made some minor adjustments to the cotton supply and demand table, but the final result was unchanged from last month, with ending stocks left at 7.2 million running bales. At the close, December futures were 15 points lower as they settled at 67.64. Livestock futures were a mixed bag. We had the December live cattle ending the session 2.5 cents lower, while November feeder cattle were 92.5 cents lower at the closing bell. Lean hog futures were stronger, with the December futures closing 27.5 cents higher. And Class 3 milk futures ended the week on a very solid note. We saw the inverted market start to come together, with the October futures up 28 points, while the November futures were 43 points higher. At the close, we had November futures settling at 19.73. And meat cutout values were lower as we ended the week. Choice box beef was $1.94 lower, closing at $214.06. Select boxes were $3.28 lower as they settled at $199.82. And pork carcass cutout values were 56 cents lower, closing at $94.80 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.